Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, October the 13th, 2010, and it's time to look at the markets. Check it out. Okay, the market was up pretty good today on all kinds of different reasons, depending on which news article you were reading. First, it was on Intel's news that came out after yesterday's close, and no, lots of selling on Intel there, lots of good sell volume there. She's in an overall downtrend, has not even been participated in this rally in any way, shape, or form, and she's not about to prop up the markets when she can't even keep up with them. All right. Then it was J.P. Morgan. So let's go check out J.P. Morgan. Okay, JP Morgan reported this morning, and guess what? They're not the reason for the rally either. So you can tell all those news articles that they're wrong, okay? Here's your sell-off right here. Nice volume. Overall downtrend has been nothing but selling here. Also announced today 115,000 foreclosures going to have to be reviewed for JP Morgan. These guys are not rallying, okay, with the overall markets. They're going lower, all right? So they're not the reason for your rally in the market, nor are they giving you any reason to buy. After this blew up in their face and they really couldn't say this anymore as these markets kept selling off, these particular stocks kept selling off, they changed it to another article I saw said that the news out of China yesterday was the reason for the rally today. And that's not true either, and I can prove that. And then the final thing I saw, I'm sure to be changed by the time I look at it again, but last thing I saw was that the rally in commodities, that's the reason for the rally, okay? This is all BS. Market went up because they were driving it higher. And I know that because I could have told you yesterday the markets would have been up substantially today if you'd gone to our website, checked out that free website at PerfectStockAlert.com. There is a link there at the top of the page. It says MPT rating. That gives a number every day for what to expect for the following day. Not the price target, but telling you whether it's going to be an up day or a down day. It's only about 85% accurate, but it's pretty trustworthy. So, I mean, 85% is something you definitely want to pay attention to. And you apply that to other indicators, and you can conclude what you think the next day is going to be. It's just a very short-term read. It doesn't give you swing traders play, but if you're looking for something to scalp or day trade or something like that, it's a pretty good tool. And there's a video there explaining how to read it as well as have the key there and everything else. But ultimately, my point is, I could have told you before any of the news came out, before Intel's news came out, before JP Morgan, before the news out of China, before the commodities rallied for the day, I could have told you that the market was going to move to the upside. How can I do that? Simple. I analyze the buy and sell pressure. The majority of buying and selling that goes out there is not you and me buying. It's not people. It's computers. They stack it up, then they lead the market the direction they want it to go. There's lots of videos out there, even on YouTube, where you can go and watch. Jim Cramer was talking about how hedge funds drive prices higher and lower. That's what we're looking at. When we look at technicals, we're looking at the trends, the direction of the market, true trends, counter trends. We're trying to determine which ones are real and which ones are fakes. Okay, that's the difference between this rally we're seeing now in the overall markets and the ones that we're looking for when we're bullish. Okay, so let's get a look at the markets right quick. Okay, continuing on the theory here, the argument is that by analyzing the buy and sell pressure, you can tell what they're setting up to do with the market, and then they're going to drive it one direction or the other. Okay, my job is to look at the chart and determine is it trustworthy or not. Now you can find overbought conditions by spotting certain oscillators like the slow Stoch or the RSI. The RSI is currently over 70. We'll show you that in a minute. And you can say, okay, it's overbought. Or you can say back here, she's oversold. We did that too. Told you look for a bounce. It happened, okay? You can do that. But you also have to analyze the activity between those 2 points, all right? From here, all of this stuff here, you've got to analyze this and say, what is this telling me? Because it's telling you something as well. This is telling you when it's oversold, short term, looking for a bounce. This is telling you here, right, you're overbought, okay? You can do the same thing with other oscillators as well. But the main thing here, I want you to analyze this right here. You see, if this is quality, it'll have certain characteristics to it. It'll have strong buy volume, meaning people with money, smart money, will actually go in there and invest because they see a future to the advance. They see that there's going to be good earnings into the future. It makes sense to them to buy here and see it ride much higher. They're not looking at a little 100 points on the Dow Jones Industrial Average or 500 points. They're looking at the future, okay? And if they put their money into it, they trust it. If they put their money into it, it'll show up on the volume If it's not showing up on the volume during the first initial phase here, it's not happening. Volume did increase today. All right, for today's activity, let me clear that up a bit. Did increase today, but it's too late. This is the chasing, the momentum rally here. This is the part where the smart money is going to be buying. They're not going to be buying right here. So that volume is not the same type of volume. It's a different situation, okay? So what you're looking at here is you're looking at a whole bunch of mess. You got a big hole here, a gap, a gap, a gap, a gap. Gaps won't show up very often on the Dow Jones Industrial Average, and when they do, they're very telltale of check the volume. It's very, very low volume, and low volume rallies fail. So any technical analyst out there, you ask him, what do you think about a rally that has no volume behind it? They're going to tell you the same thing. I don't trust it. Leave it alone. If it has lots of gaps in it, it's all low volume gaps. What do you think about that? It's going to fill short term. Okay, what if it keeps going higher? I don't care. I'm not going to mess with it. Or I'm going to leg it on the short side. Now, there are some out there that are actually day trading this so as not to hold overnight and get caught with their pants down like they did back here. Remember, this entire move right here, we've already shown you, looks just like the last one you had back here prior to the flash crash. All right? It's the exact same scenario, in my opinion. What's happening here is they're baiting you to go buy this market by driving it higher. They keep driving it higher, and people keep saying the same thing. I know it doesn't look good. I know it says it's overbought, but it keeps going higher. That's the equivalent of sitting in a car that's telling you it's overheating and say, I know it's overheated, but I think it can go a little further. Go for it. I'm absolutely sure you can, but it's never a good idea. My technical opinion is when the signals are all telling you the same thing, trust your chart. Ignore the news. They obviously have no idea what's going on out there. They just gave you 4 or 5 different reasons for today as to why the market's going up. I mean, that's ridiculous, all right? This is your call. I'm giving you my opinion. That's all I can do. My opinion says all the signals are telling you the same thing. It's overbought. It's overextended. It's not a quality rally. You want to buy it, it's on you, all right? A quick look here at the RSI on the Dow Jones Industrial Average, 70.92. Last time we were up here, we got up there just before the flash crash, okay? The index put call ratio that came in yesterday was, I think, 2.08, something like that. It's basically 2 to 1 on the options for the bear side. People are looking at this as being a big bad bear market that's about to fall apart, and I don't doubt it. Okay, here we are looking at the NASDAQ. We've shown you this before. I'll probably show it to you again later this week. This is an identical situation to the previous advance prior to the flash crash, and it tells me that the same people that promoted the flash crash situation are promoting this situation right here. You'll notice another gap. 1, 2, 3, 4, 5, 6, 7, 8, 9. Sorry, I cannot recall any of my trading experience 9 back-to-back low volume gaps, not back-to-back, but 9 consecutive gaps like this in a particular rally like this that have not filled. Not a single time. I can't find it. So that's why I'm saying don't trust this. The odds are not in favor of this being true. Just absolutely, you're betting against the odds if you are buying this rally. Does that mean that it can't go higher? No. I'm saying you wait long enough, this chart will justify and will pull back down and erase every single move that you're seeing right here. That's it, plain and simple, okay? Now, for those haters that we had today, I've had a couple of haters out there. I'd like to ask you a question. Who is going to your home, making you sit down in your computer chair and watch these videos on YouTube every single day? You need to, I don't know, take some more medication or something, because you don't have to watch this, but it's absolutely free. It's my opinion. If you don't like it, don't watch it. Okay? Awesome. A quick look at our disclaimer. Wait a minute. If you've not been to our free website at perfectstockalert.com, check it out. You can also check out the MPT rating and see what we're calling for tomorrow's market. All right? Pretty cool. A quick look at the disclaimer now. The disclaimer. Read it and weep. The information provided you can read. Okay. God bless. Take care. Hope to see you all tomorrow morning in our swing trading course live.